Look here, folks. I know you were excited about Tesla earnings. We got them coming in hot for you. Coming in hot. Stocks a little choppy after hours so far. Started off down. Somewhat of a surprise to me. Definitely one that, as I explained in my earnings for the week video, based off the metrics they showed you, you should be expecting a beat on both ends here. Both a profitability standpoint as well as a revenue standpoint, because they beat on deliveries by a good margin. Because they release their deliveries every single month, and they obviously release the quarterly deliveries at the start of the month. So you saw where this quarter was going to end up, and based off of those numbers, it should be a beat. So there's got to be something else. We'll see why the stock might be down. We'll take a deep dive. You look year to date, stock's up 18.64, and over the last year, great performance of 104%. So there's been a lot of good stuff going on with the stock. And again, you compare it to the highs they saw in February of earlier this year. It hasn't moved much since then, but still, when you look year to date again, to see an 18% gain is pretty darn significant. So that could be part of the reason too for a little bit of stagnation. You're talking about a stock up 2,000% in a 5-year period here. So definitely one that's definitely taken off, and really all of that gain has come from 2019 onward. 1,000 plus percent in the matter of a year and a half. A lot of gain there. So let's look at these earnings. Non-GAAP EPS line comes in at $1.86, beats by 25 cents, and a GAAP EPS line of $1.44, beats by 28 cents. It's really nice for them in this aspect, because they just started the profitability last year. And to see they're growing at quite a great scale is pretty nice if you're a shareholder of this company. And the revenue was not quite as big of a beat as I might have imagined. It's only a $60 million beat, 56.9% year over year, which is really nice in terms of percentage gain. I expected a little bit better based off of the delivery metrics we saw. So I'm curious where that a little bit of that difference might be. I thought this was going to be at least a six-figure. Well, it is a six-figure. Let's say 9-figure beat. I guess so. But it's still great. Great to see a beat. Gross margin came in at 30.5 compared to 24 or 28.4 consensus. That's nice. Capex at 1.82 billion compared to 1.37. Really nice. Free cash flow at 1.33 compared to 1.38. So a little bit of a didn't quite hit on free cash flow, but I don't think that's necessarily why the stock might be seeing some negativity. Primarily achieved through growth in vehicle deliveries, as we saw. Growth in other parts of the business at the same time. Average selling price declined 6% year over year as the Model S and Model X mix reduced year over year, and they're selling the cheaper models. So again, that would be the only reason for that. Nothing to really fret about there. They're selling cheaper models. It's fine. Due to product updates and a lower average selling price, vehicles becoming a larger percentage of the mix. Nothing crazy to see there. They have great margin on those vehicles, clearly. Let's take a look at the slides here real quick. Nothing crazy. They've got some nice boring slides. It's crazy a company like Tesla of all places has some boring slides. That's crazy. 1.6 billion in GAAP net income. Really nice to see that line. Really good. And record vehicle production and deliveries. You should see this every single quarter for the near future. Should always continue to grow there, really. Should continue. Here, great chart. Obviously, you see our automotive revenues continue to grow higher, 58% growth year over year. Really nice. It's really nice. Yeah, automotive gross profits also growing significantly. And that's where really the thing, where it comes in, is you see this margin continues to grow, looking really good. 281 basis points of growth year over year. You like to see it, you really do. Really do. I like to see it. Revenues, that's right, up 57% when you're looking at total revenues, which is obviously including the solar portion of it. And insurance as well, so keep that into consideration. They have multiple avenues for really generating revenue, and I'm sure they will definitely state that in just a wee bit here. Again, key points, profitability, definitely one thing that I would pinpoint. Here you can see the production mix, how it shifted a little bit here. When you're looking at quarter 2 of 2021, a lot less in terms of the SNX production, but deliveries is where you see a big difference here. So you see a greater percentage, a greater percentage of Model S and X delivered this quarter compared to Q2, but still year-over-year declined 39%. But overall, you see your cheaper Model 3 here delivered significantly more in comparison to what it did last year. I mean, we're looking at year-over-year, 15K versus 124. That compares to 9K versus 232. So again, the cheaper Model 3 really just kind of took over the Model S there. So that's where you see a little bit difference in average selling price. Nothing crazy. Solar being deployed. Again, the solar business is not a major part of this business by any means, but it's there, growing 46%, which is nice. And store and service locations, 35%. Supercharging stations grew 49%. And again, I think that's really my main dilemma at the current moment when you're talking about electric vehicles. It's almost pointless to consider an electric vehicle in your life if you can't get a charger at home. And you need to. And it adds a lot to your electric bill, obviously, but charging stations just, look, it takes too long to charge your vehicle fully, so that's why it's really mostly viable just at home. You don't need to charge it incredibly often. Again, we're talking about range of over 300 miles here, but it's not convenient if you had to get it while you're out every single time. It's just not convenient for you because charging stations, they take just a bit too long. Let's be clear. Updates on some of the factories, obviously. Great thing we talk about the Fremont Factory, and the Gigafactory in Texas is progressing as planned. Potential new headquarters for Tesla. We'll see what it looks like because California is a sucky place to do business. Very sucky. The government hates you if you run a business in California. They'll take everything from you. Still to be determined here, listed. The Cybertruck's in development, going to be produced in the Texas Gigafactory eventually. We'll see what that looks like. And to be determined, the Semi, Roadster, and the quote-unquote future project. Not quite sure what that looks like, but we'll see what it looks like. The Model Y, obviously great for them too when you're talking about SUV production in Berlin and Texas here. It'd be really nice to see that for the future. So we'll see what that looks like. Curious what the future product is. I'm sure they'll unveil it at some point with a crazy event. But obviously the Semi could be big for them, very big for them if they're the first one really to the market with it. Because a lot of these companies that are going to be switching, they've already switched to electric work vans. They're going to be switching to electric Semi as well. If they're able to do that via Tesla because they're the first on the market, they certainly will. Think about a company like Walmart. They certainly would partake in Tesla Semis if given the opportunity. So definitely could be a major market for them. Market share of Tesla vehicles by region. You see growth here in the trailing 12-month standpoint. Obviously, nothing really going for China prior to the China Gigafactory, which is not a shocker. But it's great. Great rise there, all things considered. So really nice to see. Really nice to see. Nothing crazy here as far as battery, nor solar. I mean, it's nothing really crazy to say on the solar business. Not something that I think is really crazy. Update on the Model Y. Should begin to build in Berlin and Austin, the Texas factory, before the end of the year. Again, not quite built yet, but eventually, ideally, once they have finished before the end of the year. So by next quarter, they should be producing these, and they should be delivering them as of Q1 next year, which could be major for them. Again, the Model Y could be fantastic for them. And then making progress on the industrialization of the Cybertruck, how they're going to build that, make it profitable. We'll see what that looks like. Berlin Gigafactory. I mean, I guess there's they did a county fair there. Who knew? There's a freaking Ferris wheel at the Tesla Gigafactory. Not necessarily my number one location for a get-together place is a factory, but look, I mean, if you love production that much, I get it. Look at how happy they make you. I mean, this is a great place. They've got fake plants on the inside, little workstations, okay, little workstations. Looks like there's a red MAGA hat on the right side there. Someone at their workstation has a MAGA hat. Props, you can do what you want. It's Berlin. I guess they love him. Look at the production here, the Model Y. Look at it come out with your bubbly vehicle self. Could be great for them though. Great stuff. Shanghai, obviously already doing it. Look at that. Look at the gigapresses. Fun stuff. Key metrics, obviously vehicle deliveries. You see a great line here. Operating cash flow, great net income, and adjusted EBITDA continue to grow. Really good that they've been able to turn that around for this company. It's really nice. Really nice. Financial statements, we're just going to look at the balance sheet and then call it a day. Total current assets, I'll look year over year, $21.7 billion the year prior, now sitting at $25 billion, a growth in the cash position, as you can see there. Total assets in general, 45.6 to 57.8, so quite a big growth there. Obviously some in the current asset position, but you see other growth here in terms of property, plant, and equipment. Obviously, in terms of production of the factories, I presume is where that growth kind of comes in. Liabilities, we're at 28.1, now at 29.3. Not that much growth, all things considered, when you talk about how much assets grew. So, shareholder equity looking good, $27 billion compared to $16 billion. Massive growth on last year of $11 billion. It's great progress on this balance sheet. It looked good. Now, again, this is a stock trading pretty pricey still, all things considered. We're talking about an $857 billion market cap on a company that's going to bring in, likely this year at revenues, right around a $40 billion number, $45 billion number. We'll see what it looks like, but it looks like it should be close in between the $40 to $50 billion line. So trading at a market cap of nearly 20 times that it's expensive. Really, it is over 20 times that, potentially. It's very expensive, and a P ratio of 450, incredibly high. I don't like the valuation on Tesla, and I get why that there's a lot of excitement about it. My main critique here, and again, I've been wrong on Tesla, so I'll own it. I was wrong on Tesla back when it was $400. I didn't see it going bonkers when it hit this $400 wall. I didn't think it would take off, another 100% in the next freaking years, less than a year period. I was wrong on that aspect, and I own up to that. I certainly do. The stock's gone bonkers, and I just don't like the valuation, though, right now. Look, it's a great company, and I do still think they have a lot of opportunity. If they're first in the game with a lot of these things, just off of name recognition, they'll do really well. There will be a lot of competition over the next couple of years, though. We're talking about Cybertruck's going to have to compete with the Ford Lightning next year. It's going to be a tough competition for them. Ford's obviously a very well-loved, it's a beloved brand for trucks. So it's going to be tough for them. And overall, electric vehicles, they're going to be producing a lot more as we come into it. Hope you're excited and have a great, fantastic day.